Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures, which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets. The ridiculous rallies that have taken place, taking junk bond yields down to just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at ARC, which was very close to the beginning of the firm, I remember saying very early on, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs, have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected. Monetary policies around the world have pretty much become unhinged. And, talk about trust. I think there's more trust in this ecosystem, in the way you've defined it, risk minimized, than there might be in the traditional world. As if we're right, there's going to be a lot of creative destruction and counterparty risk. And these banks are going to be losing share to the crypto world. And I want to get back to that in a moment, because you seem so surprised. And I think it's so obvious, but now I realize what the disconnect is there. But yes, absolutely, I can. And if I could say something, I learned an important lesson it was the currency crisis, the Asian currency crisis in the 90s, 97, I think it was. And the Thai baht devalued, and nobody thought anything of it. Thailand was, hardly measurable out there, but it ricocheted. There was an Asian crisis that took place, domino effect. And so we began to ask companies like Boeing at the time, oh, what's your exposure to Asia? It seems as though something's unraveling there. And they'd say, nothing, not even 5%. Well, what they didn't say is it might have been 4% of their sales, but it was more than 100% of their growth. And so when Asia went down, Boeing's earnings imploded in a way that most people couldn't understand, because they said, wait a minute, they told us it was only 5%. Yes, but they didn't say what percent of the growth it was. And I think we're talking about something equivalent here. And so, oh yes, the banks are onto this.